There's a special form to put on our tax return if we're using the Rule of 55 or a 72T payment plan. Hi, it's financial planner Sean Mullaney. Let's discuss. So more and more Americans are retiring before age 59 and a half. And many of them are avoiding that pesky 10% early withdrawal penalty on traditional retirement account distributions by either using the Rule of 55, which I talked about on the channel last weekend, or by setting up a 72T payment plan from a traditional IRA. I've talked about that on the channel before as well. And so, when you do that, the IRS computer might be thinking, wait a minute, this person isn't 59 and a half. Don't they owe that 10% early withdrawal penalty? And if you're properly using either the Rule of 55 or a 72T payment plan, guess what? You don't owe that 10% early withdrawal penalty. That's why we like these exceptions so much. But we got to make sure that when we file our tax return every year, there's this form 5329 with the tax return, because that form is, perfecting, making sure the IRS knows, okay, this person qualifies for either the Rule of 55 or the 72T payment plan. So what's going to happen is this. You're going to get, every year you take money from an IRA or a 401k, they're going to send you something called a Form 1099-R. And that's going to show the amount that you took out of your retirement account that year. So let's just say you're under 59 and a half, you took 70,000 from one of these retirement accounts. So on line 1 of this form 5329, you've got to put your early distributions. You're under 59 and a half, you took 70,000, say, from your 401k, IRA, whatever it is. It's not Roth, right? That's a whole other conversation. Just a traditional IRA, traditional 401k, 403b, whatever it is. You got to put that on your part, line 1, 5329, okay, $70,000. But then on this line 2, we're saying, look, IRS, I qualify for an exception, so don't charge me the penalty on any of that. So on this line 2, we've got to put, all right, all 70,000 is not subject to the 10% early withdrawal penalty. They call it an additional tax. But then we got to do one more step. We got to tell the IRS on this form what penalty exception we're using, and they have codes for that. And it goes right in here. You can see that there, this line. Well, where are these codes? They're in the instructions to the Form 5329, and those instructions have on page 4, they've got the different codes for the different exceptions. And if we're using the Rule of 55, the code is actually this 01 right here. So all we got to do is go back to our 5329 and put 01 right there, and then we have 0 in the amount subject, they call it the additional tax, usually colloquially referred to as the 10% early withdrawal penalty, whatever. We're saying 0, we qualify under code 01, Rule of 55, we're done, make sure it gets filed with the tax return. Awesome. Well, wait a minute, what if we're doing a 72T payment plan? Well, what do we do there? Well, that has its own code. It's not 01. We go back to these instructions, and it turns out it is code 02. It's distributions made as part of a series of substantially equal periodic payments. So we go back, we put 02, and we're good there. So the 5329, it's dotting the I's, crossing the T's when we're doing our tax return, when we're relying on the Rule of 55 or 72T payment plan. Hope you enjoyed this video. If you did, please mash that like button and subscribe to my channel. I'll see you next time.